And now it's time for Edwin AM with your host, Edwin Allen Parker. Good morning, Street. I'm Edwin Allen Parker, and these are the rough times. It was an interesting week last week. We saw the Dow start to come back a little bit. Stocks are warming up after those interest rate cuts by the Fed, and also starting to see the dollar come back a little bit, though most would argue that it's due to weakness overseas, especially in Europe. That's fallout from the credit crunch debacle here in the United States. But nevertheless, we're starting to see a little bit of warming up there, and that's welcome. Let's start this week by taking a look at Anadarko Petroleum, ticker symbol APC. So if you're ready, Street, grab your coffee and your spreadsheets, and let's get it on. Anadarko Petroleum, they're not a company for the weak at heart right now. They've been going through a transition phase here the last couple of years. They've got some negative working capital, and they're carrying quite a bit of debt. Last year they also saw a lot of that debt come due and caused a cash shortfall, which they covered through asset sales and stock sales. So let's start up here with our capital structure. They had a good return on capital. Return on capital increased their value, and their capital structure is transitioning. Their return on capital also produced a risk premium of 14.2%. That's pretty nice. Under the equity section, they had options cost shareholders 23.3. That's under hang down here. That was 5 cents a share. They've also got additional options of 2.3 million out that if they're exercised, they'll cost shareholders another 2 cents a share and add 137.9 million to paid-in capital. Under our capital management, they're burning cash. They had cash inflows, core operating cash inflows of 8.8 million a day, while their capex was 14.24 million a day. That created a free cash flow deficit of 5.38 million. They're burning 1.88 million a day. That leaves them with 661 days of cash on hand. As I mentioned a little bit ago, they sold stock and they paid down some debt, but that was mainly because they had to, because of the cash shortfall. CapEx is up 13.7%. We've got undetermined sustainability in their expansion. That expansion's in line with demand, and it's been gearing up, and they've got efficient use of their CapEx spending. And we've covered that. We beat that pretty much to death the last few weeks. Their short-term footprint, it's not looking that great. They had unsustainable earnings growth, operating margins fell, bill paying ability fell, core cash flows fell, just about everything fell. Let's see what else we got going on here. I've got a fair value price on the stock around $80.91. That's well below the market, or well above the market price of 60.04. Okay, asset management. They've got medium asset intensity. They liquidated assets. Like I say, 19.2% of their assets were liquidated. Their assets are selling at a discount. That's one big plus for the company. And their assets and their tangible book value are transitioning. Have no inventories. Their cash position improved by 480%. And like I say, they're carrying a lot of debt. Their leverage was 114%. Payout ratio is 1%, which is really low, but they do still have a decent return on capital. Not return on capital, but total return. They have a 10.2% total return, but that's mostly from money that's being plowed back into the business, since they only have earnings per share of 9 cents per share. That's about all I have for you this week on Anadarko Petroleum. Make sure you read your footnotes down here at the bottom, because I elaborate quite a bit on some of this stuff down there. So that's all I have for you, Street. Have a great week.